most of us invest only in Indian stocks, and honestly, there's nothing wrong with that. But if you really want to become a better investor, it's important to look beyond just the Indian market. Some of the world's best companies are listed in the United States, and occasionally, you come across businesses that are fundamentally strong but don't get much attention from retail investors. So from time to time, I'll also be bringing you interesting US stocks that I think deserve a place on your watch list. Today's company is one such example. It's called Northrim BanCorp, and its ticker symbol is NRIM. Now, don't expect this to be the next Nvidia or Tesla. This isn't a flashy technology company that's making headlines every day. Instead, it's a regional bank operating mainly in Alaska. And what caught my attention wasn't the hype. It was the numbers. Let's break it down. The stock is currently trading at around $27.8 per share. Not long ago, it was trading close to $31, so it has already corrected a little from its recent highs. Whenever I analyze a stock, I don't just look at the share price, I always ask one simple question. Am I getting a good business at a reasonable price? And that's where Northrim starts looking interesting. One of the first metrics I check is the price to earnings ratio, or PE ratio. Right now, the company's trailing PE is below 10. To put that into perspective, many quality companies trade at 20, 30, or even 40 times their earnings. So paying less than 10 times earnings for a profitable bank immediately grabs my attention. But here's something I've learned over the years. A cheap stock isn't always a good stock. Sometimes it's cheap because the business is struggling. That's why the next thing I check is profitability. And this company scores really well here. Its return on assets is around 2%. Now, if you've never analyzed banks before, let me tell you something. Even crossing 1% is generally considered good in the banking industry. So 2% is actually very impressive. Then comes return on equity. The company is generating more than 21% ROE, which tells us it's using shareholders' money very efficiently. These are the kinds of numbers I like seeing before I even think about adding a company to my watch list. Now here's something unique about Northrim. Unlike most American banks, this one operates primarily in Alaska. And you might be wondering, why should an Indian investor care about Alaska? Well, Alaska's economy is very different from many other parts of the United States. It's heavily dependent on industries like oil, natural gas, mining, and natural resources. Because of that, its economy doesn't always move exactly like the rest of America. During certain economic slowdowns, Alaska can remain relatively stable because global demand for energy and commodities continues. That gives Northrim a fairly strong customer base and a relatively stable lending business. Another thing I personally liked is the dividend. The company currently offers a dividend yield of around 2.3%. Now I know some of you might say, only 2.3%? That's not very high. But here's why I think it's attractive. The company pays out only around 22% of its total earnings as dividends. That means it still keeps nearly 80% of its profits inside the business. This gives it plenty of room to increase dividends in the future while continuing to grow. Personally, I'd rather own a company with a safe dividend than one paying huge dividends today but struggling tomorrow. Now, let's talk about the biggest question. If this company is so profitable, why is the stock still trading so cheaply? The answer is actually quite simple. Last year was an exceptional year for Northrim. The company reported record profits thanks to higher interest rates and some one-time gains. Naturally, analysts don't expect those extraordinary profits to continue forever. So they're expecting earnings to come down slightly and return to more normal levels. Because of that, the forward valuation is a little higher than the current valuation. That's one reason many institutional investors are being cautious. But even then, the valuation still looks quite reasonable compared to many other banks. Another thing I always like checking is whether a company consistently beats analysts' expectations. Northrim has actually done a good job here. Over the last few quarters, it has delivered earnings that were better than what Wall Street expected. That usually tells me management is executing well. Of course, no stock is risk-free. Banks can be affected by changes in interest rates, loan defaults, regulations, and economic conditions. So this isn't a stock you should buy blindly. Always study the financial statements, understand the business model, and invest only if it fits your own investment strategy. Now, is Northrim BanCorp going to double your money in 6 months? Probably not. But if you're looking for a profitable business, trading at a reasonable valuation, with a healthy balance sheet and a stable dividend, then I definitely think it's worth adding to your watch list. One thing I also want to mention is that on this channel, I don't just want to cover Indian stocks. Yes, we'll continue discussing Indian companies, mutual funds, and personal finance because that's highly relevant to all of us. But from time to time, I'll also bring you interesting opportunities from the US stock market. The idea is simple. The more businesses we study, the better investors we become. Whether a company is listed on the NSE or the New York Stock Exchange, good investing principles remain exactly the same. If you found this analysis useful, let me know in the comments whether you'd like to see more US stock breakdowns alongside Indian stocks. And if you're interested in learning about investing, personal finance, Indian stocks, and global investment opportunities, make sure you subscribe to the channel and turn on notifications. Thanks for watching, and I'll see you in the next video.